What is up, everyone? So right off the bat, I want to start by saying when I said millionaire in your 20s, maybe I didn't quite mean while you're still in your 20s. Oh, so he clickbaited us? Maybe a little bit, but I don't want you to turn this off yet, because if you start what I'm about to talk about in your 20s, I promise you, you'll be a millionaire by the time you retire. Now, if you're not 20, if you're in your 30s, 40s, if you're even 60 and up, it's never too late to start. So I'm so excited for you guys to hear this and for me to start making videos again. Let's cue the intro. Alright, let's get straight into it. And let me start by saying this. If you haven't retired by the ages of 55 to 65 in the United States, I don't know how to put this softly, but you messed up. And I don't care if you worked at McDonald's your whole life. What did he just say? Even by working at Mickey D's? Alright, enough from you. Yes, even by working at McDonald's, you should be able to be retired by the ages of 55 to 65. And here's why. It's a little thing called an IRA. Now, there's two different types of IRAs. We have the traditional IRA and the Roth IRA. And I'm all about that Roth IRA. Wow. So let's get into what exactly these things are. So what is an IRA? An IRA stands for an individual retirement account. And so you can open this up at your bank, your credit union. There's other online brokers that you can use. And then the difference between the traditional and the Roth. A traditional IRA is using money that's not already taxed. And so at the end of the year, when you're doing your taxes, you can write off what you put into that traditional IRA. The catch is when you withdraw this money, which is at the age of 60 or 59 and a half, that money is then taxed upwards of 25% depending on your tax bracket. Now, why I like the Roth IRA so much is I don't write it off in my tax return every year, so I don't get that little bit of money at the end of every year. But when I'm going to withdraw all that money when I'm 60 and ready to retire, then it's not taxed at all. It's just straight cash. That's what we're all about, obviously. So like I said, you can open these up at most banks. I personally have mine through my Chase account. So I have my checking, savings, and then also my Roth is all done through there. But what do you do within this Roth? So you invest within the stock market. Fairly easy. In another video, maybe we can get into what I personally invest in. So this could be mutual funds, ETFs, or just straight up stocks, Apple, Facebook, whatever it may be, and it's whatever you want. So in summary, this Roth IRA is just really a place where you can put your savings and you just invest in the stock market. Now, I know this sounds a little scary. Like, what do I invest in? And I'm hoping we can make videos in the future about what I'm investing in at the moment, what I've done in the past, as well as other greats like Warren Buffett and Ray Dalio. So I know you've been waiting. How do I actually make that $1 million from $100? So let's go over to the numbers and actually figure that out. Show me the money! Okay, so here's a little website, calculator.net. Super easy. Just find the Roth IRA calculator on it. It's got a sweet little workout plan even, if you want to look like that guy. Nice. So super easy. Current balance, let's say we're starting with $0 within our account. Annual contribution. So I'm going to start with $100 a month. $100 a month. I'm not asking for much here. Just, I don't know, don't go to the bar 2 less times a month. Quit eating out so much. Mow someone's yard. It's not that hard. Anyone can save $100 a month. And look at what it's about to amount to once you're 65 and ready to retire. So $100 a month, like we discussed, that adds up to $1,200 a year annually. So annual investment return, I'm going to put in 10.5. So annual investment return, what's that mean is the stocks, the mutual funds, the ETFs you're invested in, how much will they make you within that year? I'm just going to use the S&P 500, the Standard & Poor 500. All that is the top 500 companies available on the stock market. They're wrapped up into the S&P 500. It's just a very safe play, and that averages a year since 1951 it is till today is 10.5%. And we can do way better than that. Setting the bar at just the S&P 500 at 10.5%, I mean, that is not that hard. And maybe in future videos, we can go over some of my investment strategies, as well as, famous investors like Warren Buffett, what they like to do, so we can get even more than 10.5%. So 10.5%, current age, we're gonna say you're at the ripe age of 20. I started mine at 21, thankfully, and many of you may not be starting at 20, but it's never too late to start, like we talked about. So retirement age, we're gonna say 65. It's a good age to start thinking about retirement, possibly. We're gonna ignore the marginal tax rate and inflation rate at this time. We can talk about that in another video. And I'm gonna click calculate, and this is gonna be the balance at the age of 65. Like we said, $1 million is what you're gonna have. So, getting into it, total principal, this is what you contributed in your lifetime from 20 to 65 into this Roth. $54,000. That's it. And you turned that into $1 million. Then down here, we can look a little bit more, starting at $1,200. And then by the time you're 65, boom, ending at $1 million. So I hope you guys are starting to see the bigger picture and the power of the Roth IRA. Like I said, $100 a month, that's a joke, literally. And by 65, you'll have $1 million of just straight cash that you can withdraw, and it's not gonna be taxed. Well, you may be asking, how do I retire with that amount of money? And that's just also simple math. Like we said, if you're getting 10.5% each year and you have $1 million, that means you're gonna be getting $100,000 every year. Obviously, it's a little more complicated than that, but I bet many of you are making less than $100,000 right now. Oh, and for those of you that are sweet, I bet you have health insurance too. Just kidding, you better have health insurance. So I want to have full transparency in these videos about me, at least. So, just being honest. I hope that we can create somewhat of a community here. I hope that I can continue to make videos, and I would love for you guys to comment. Please comment, say what you like, what you don't like. Maybe you hate in a Roth IRA, you think it's stupid, you can call me an idiot, that would be sweet. But maybe if you include why you think that, so we can all learn, that would be great. So now I would like to show you an example of a Roth IRA, and that being mine. I'm gonna do it over an Excel sheet so you hackers can't, take over my bank account or whatever. So let's get into that, and we're gonna hop over to Excel. And before we head over there, I'm showing you this not as a flex. It's a decent amount of money for my age, I like to think, but we're not gonna act like I'm not drowning in student debt right now. So here we go. All right, so just a quick look at representation of the value of my Roth IRA. So I just had the total amount of months. I've had it a little over 4 years now, actually. So I'm 25, started it when I was about 21. And this is the power of the Roth. I started out here, so you can see I put in like $3,000, and it continued to grow and grow. That's basically it. This is just one example, being my Roth, 4 years, starting from zero, and now we're floating a little bit over $50,000. So as you can see, through the second year, I was pretty fortunate with a pretty good Tesla call. And then after that, after COVID, there was the huge tech boom, which did make a lot of money for the Roth, which was awesome. But maybe we can talk more in a future video of how I invested back then, and I would love to talk about how I'm investing right now, especially in this bearish market, in my opinion, with a war going on and crazy inflation. I want to revisit that calculator.net real quick, because the maximum amount you can actually contribute to your Roth IRA a year is now at $6,000, and I think if you're above the age of 50, I think it's $7,000, and then if you are married, obviously that can be doubled as well. So let's go back to the calculator and see what we can make if we are contributing the max amount. All right, back at calculator.net, we're gonna go to annual contribution of $6,000. So that's only $500 a month, which isn't too crazy really, especially if you have a good paying job. We'll keep it at the Standard & Poor's S&P 500 annual average of 10.5%, which is very easy to obtain. Calculate look at this. You're going to be retiring with $5 million at the age of 65. And just for fun, we're going to go up to 12% just so you can see how much that annual investment return matters in the long run. So only 1.5% more, and you have $3 million plus more dollars when you retire at the age of 65. A couple other closing points that I wanted to mention. Back to the example of my Roth, I've contributed about $15,000, so pretty good returns, and you guys can have that too. And another point is with the Roth, you can't touch this money until you turn 60. You just got to stash it away and watch it grow, and then one day you'll have all of that to retire on. So I think I'm going to wrap the video up here. Please, like I said, comment. It's awesome if you'd subscribe and like too, obviously, so you can keep in touch with when I make new videos. But yes, please comment other videos you'd like to see, what you liked about this, what you hated about this. I would love to, continue to learn with you guys as well. So I guess that's basically it. Off to the outro, and love you guys. See you guys soon.